Hey everybody, welcome to today's game plan. My name is Gareth Soloway, Chief Market Strategist at Verified Investing and InTheMoneyStocks.com. It is 9 a.m. and I am pumped because we have a ton of stuff to go over. S&P 500 futures are diving, NASDAQ is diving, except for NVIDIA. NVIDIA is up on momentum. We're going to cover that today, but I want to get right into it. So we're going to jump over to this screen right over here, guys. So what we're basically looking at here is a tweet that I did, all right, and we're talking about China here. China, again, take a look at this, guys. So essentially, the second largest economy is in deep trouble. And I tweeted about this because it's important to understand what's going on. Retail sales missed, coming in at 2.5%. It was expected to be 4.5%. All right, industrial production missed, coming in at 3.7%. They expected it at 4.4%. Fixed asset investing missed big as well, 3.4%. It was expected to be at 3.8%. Now, the kicker is this, guys. So this isn't everything in China right now, but this is what started to freak the futures out, the S&P, NASDAQ futures in the overnight, and actually caused the dollar to start to gain some traction and some other things, right? We're even seeing the 10-year yield is continuing to push up. We'll look at that chart. But what you have to remember about China is that China in general fudges their numbers. Okay, so if they're reporting these numbers as misses, it's probably a lot worse than that. And that's something you have to be aware of. Now, again, how does this relate to the US or anywhere in the world? Well, essentially, the more China struggles, they are now the second largest economy in the world. This means that we probably are going to see some sort of effect on them. All right, now, here's another key. All right, China, there's been a lot of data on this. The youth unemployment rate in China is 20+%, even in the 21 to 22% range. They announced that they will stop reporting the youth unemployment rate. That means it's getting worse. All right, if it's going to improve, like think about this logically, right? If it's going to improve, you don't say, hey, we're going to stop talking about that. All right, that's an issue, guys. And 20% unemployment in youth, that's major. And that's a headache for China as well, as the regime is going to have to deal with those people and, again, figure out how to make them happy. So, again, a lot of things going on here. All right, couple other things to go over. I want to continue on here, guys, as we continue down. All right, if you just look again at the analysis, you have to understand that basically what we have is China struggling here, and that means that the rest of the world is going to struggle. All right, couple other things, guys. We're going to jump over to this screen over here. I want to talk about the U.S. data. So this morning we got U.S. data. Now, before we get into the U.S. data, one of the things I want to mention is we did have Fitch coming out this morning and threatening to downgrade the big banks, including JP Morgan. Now, we're not just talking about a downgrade from buy to neutral or overweight to equal weight or underweight. We're talking about their credit ratings. And again, I will say this. There's almost no teeth to this right now because we already saw Fitch downgrade the U.S. debt. Okay, then we saw Moody's a week and a half ago come out and say, hey, we're going to downgrade regionals, and we're warning the big banks. So essentially, Fitch is doing exactly what Moody's did, and it's one of the reasons why I don't have it highlighted here or anything, because as of now, that's not that big of a deal. Now, if they actually downgrade the big banks, that would be new news. Right now, it's just repeating what Moody's said a week and a half ago. I digress. We move on. Check this out. Stronger than expected U.S. retail sales data keeps pressure on stocks and the Fed. So essentially what we have here, guys, and check this out. I got some data on this right here. Retail sales came in at 0.7%. Expectations were only 0.4%. Now, the reason why that's important here is that the higher retail sales go, the more inflationary, right? So think about this. If you have a limited supply of goods and more people are buying those goods, price can naturally and will go up because of the supply-demand curve. All right, so again, the more people are buying goods, the harder it is for the supply side to keep up. Thus, it equates to essentially prices going up. That is inflationary to see stronger than expected retail sales numbers. Now, this is where it gets tricky, right? You'd say, okay, retail sales numbers are good. This is great, right? This means the economy's doing well. Not so fast. And this is where I get into the stuff where I talk about how important it is to get it from the whole perspective. So you got a good economic data point, but it's inflationary. Now we get Empire State Manufacturing. All right, so this is a manufacturing signal. And this came in at minus 19 minus 19 when it was expected to be only minus 1.4. So 1.4 was the estimate, minus 19 was what it came in at. That's not good. So there's what you're seeing here is, to me, this is what you're seeing, guys, and this should scare the hell out of you, is that you're seeing the consumer, which now has over $1 trillion in credit card debt. You're seeing a country like the US that is paying now $1 trillion just in interest. The consumer is still spending. They're saying, well, you know what? I've got credit cards out the yin-yang. Let me just charge. But the problem is you're seeing the underbelly of the economy, the manufacturing area, and other signals, they're starting to stall out. All right, so that's important to understand. The last data dump I want to bring up here that relates to this is the import prices. So we're importing as the U.S., we're importing goods. Expectation was 0.2% increase in import prices. Now, import prices are an inflationary gauge. They came in at 0.4%. So again, we're seeing the whole picture now, right? Retail, we're still buying. As a consumer base, U.S. is buying. We're buying, running up debt. The problem is import prices because of that are going up, and on the underbelly, manufacturing is starting to weaken. And remember, and I've said this now for months, is that there's a delay in the Federal Reserve hiking interest rates and how quickly it feels it in the economy. 6 to 12 month delay. If you go back 12 months, the Fed funds rate was only around 2.5%. 2.5%. We're now over 5%. So there, you could argue that there's still a 250 basis point impact of interest rates that the economy has not felt. And that's problematic. All right, that's where we end here. I'm going to jump back here, guys. In fact, I want to talk a little bit more. We're going to jump over to this screen in just 1 second. But again, I'm trying to give you guys the real down low type of stuff in these game plans so you're fully informed when you go out and you make decisions. Make whatever decisions you feel comfortable with. I just say go in being informed. All right, jumping over back to here, guys. Couple things I want to show you. Fund managers, right? This is a big headline to me. Fund managers are the least bearish in more than a year, says Bank of America, wiping out a buy signal. Now, if you go back to the beginning of 2023, fund managers, this headline would have read, fund managers are the most bearish that they have been in a year. So do you see how the contrarian angle here is important to take into account? So essentially when fund managers and retail, and by the way, people have this reverence for fund managers like, oh, these are the geniuses. No, I have met so many hedge fund managers that honestly have no better clue than anyone out there that you can't go by that. In fact, this is what you have to pay attention to as a contrarian indicator. Now, that's not to say that, you know, someone like some of these big players like an Ackman or an Icon or a David Tepper, I mean, they are geniuses. Don't get me wrong. But again, if you look at the entire hedge fund community, it's probably top 3% that are good, maybe 5%. Everyone else rides a bull market, just like every retail investor. All right, so this is a contrarian indicator. I want us to be very aware of that because, again, this makes me nervous that you essentially convinced all of the fund managers or a majority to now go long the market, which explains why the market just went up nonstop for months at a time here since last October. Now that's problematic because if they start selling and retail gets skittish, then everything comes tumbling down in the stock market. All right, jumping over here, guys. Let's keep going here. All right, so I have another key data point to show you guys. This is an interesting note. So what we have here is a Michael Burry story, right? So we all know Michael Burry. He's the one from The Big Short. He basically called the big collapse in 08, 09. All right, Burry, famous for Big Short, bought bearish options against the S&P and NASDAQ 100. Now, this data is a little old because when we're getting it, it's already from the end of the last quarter, so it's already like a month plus old, right, from the end of the last quarter. But this is the kicker, guys, is that he has a fund that's worth about $1.6, $1.7 billion. He shorted, if you read into the details here, all right, and I'll even lower it down here. If you read into the details, all right, his fund, $739 million put in puts against the Qs. So he's betting with $740 million that the Qs are going to go down via options. And he did $886 million against the S&P. So you're looking at a fund manager that has about let's call it $1.7 billion. And he's essentially putting $1.5 billion short the NASDAQ and the S&P. Now, normally, if this was a small number, like if it was 100 million or 50 million, it wouldn't cause me to even raise an eyebrow. But this is someone who has a history of calling for big drops, and he's done this to me. Again, it doesn't necessarily make me more bearish or less bearish, but I put it right in here and I say, okay, it's important to know that. You have to take information whether you like it or not. And this is key, guys. You may not like the information you're getting. You still have to be smart about it. You need to be neutral. As a trader, as an investor, you are right in the middle. You don't want to be a uber bull, like they call them maxis now, like maxi for Bitcoin, like, oh, I'm only bullish at all times. You don't want to be like that, because those people end up riding the bear markets when they could be smarter and exit when they see froth in the market, like at 69K on Bitcoin. Instead, be neutral and take all the information out and use it logically to your advantage. And that's the key, guys. All right, back over here. I want to get to some charts real quick. So ultimately what we are seeing, and I do want to show NVIDIA's chart here because NVIDIA continues to be a rock star. I mean, there's really no other way to talk about it. This morning, NVIDIA trading at 446 here, and we can see that on the chart. I want to show you guys this because this was even amazing to me. Yesterday, I gave you guys a buy signal on NVIDIA, right? And the buy signal here was, and let's talk about this here, and let me just clear this out here. Bear with me here as I'm getting the hang of this new board here. But, we can do it that way. There we go. All right, so essentially what we had here is a level right here, right? There was a gap fill right in here, right at the 400 even number, right there. And that was yesterday my buy signal for NVIDIA if it got there. It got to 403, and then it just ripped. Now, what does this tell me? It tells me the markets are not necessarily, especially when it comes to NVIDIA, acting logically. In addition, if you take this high here to this low, that's essentially from 481 to 403. Yesterday alone, we did a 50% in one day. So, by the way, you know what date this was right here? All right, what date was this right here? That was July 14th. Yesterday, when this happened, August 14th. Exactly to the day, 1 month, from this top to here, okay? And we did in one day, we negated this entire down move with a 50% retrace. Think about that. One day, we erased 50% of the entire drop exactly at the 1 month anniversary of the top. Now, to me, that's pretty darn cool, right? I mean, think about that, right? That is just beyond awesome, but it also tells me that there's probably some manipulation going on here. And again, all of a sudden, I'm hearing a lot of bulls. Like, you couldn't, over here, there were no bulls. I mean, essentially, there were no bulls. It was all bearish. Oh, my goodness, semis, AI is over, and blah, blah, blah. Miraculously, the narrative, right, all of a sudden shifted, and to me, that's a little suspect. My guess is there were some players there that bought some call options. You might even be talking zero-day call options, and a lot of that upside is. Now, looking at resistance, right, where's this going back to? Your max upside's probably right in this range right here. So we got down below this trend line, beautiful trend line right here, and my guess is that's where we're heading back to. So just be aware of that, guys. All right. Couple other charts I want to go over real quick. We do have some earnings this morning on the likes of Home Depot. So if we take a look at Home Depot, here's your Home Depot after hours chart, or essentially, bear with me as I got to click this off here. All right, so here's your Home Depot. And essentially, Home Depot initially pre-market opened higher on earnings. It's now come in, but look at this. This is yesterday, and this is pre-market, almost unchanged. Whoa, I'm getting crazy over here. But basically unchanged. So to me, do I care about this as trading it today? No, couldn't care less. I want to move on. I want stuff in action. As a day trader, right? As a day trader or a swing trader, if there's not volatility, then you have no edge. You have no edge, which is why it drives me nuts when investors try to overtrade because they just have to be in a trade. Wait for the volatility, wait for the technicals, and abide by them. Use them to your advantage. That's the only way you can become the casino versus the gambler, right? In the casino, yeah, they lose occasionally, but the idea is that over the long term, enough trades, you win, and that's the goal. All right, SC, this is a big mover, guys. Take a look at this drop on SC. Yesterday, it essentially closed around $57. It was briefly higher this morning, and then look at the cataclysmic decline. Now, this is actually getting interesting. All right, I'm going to show you guys this. So if we flip to the daily chart, okay, if we flip to the daily chart, there's a level here. There's a couple levels, in fact. There's this first one right here, which, again, we're actually now just a little bit below. So again, we are currently trading around 46, 46 and a quarter. So basically it's 46. So there's a gap fill right here, and that's what we're at this stage. Now, again, that's a high risk level. You might be able to buy that. Maybe I would, if you do it, go really light, be very, very careful. But again, maybe you get a little bounce off this level, $46 level, right? It's a gap fill. It's technically, there is some technicals there for support. The level that I think is a little more intriguing would be this one down here. And I know it's harder to see because it's at the bottom of my chart, but it's at $40.65. And the reason why this one's important, if we look here, right? So if we look here, all right, this is also a gap fill right there, but it's also the 52-week low, or basically a multi-year low. So that one is the more interesting one. And again, if I flip over here, we can see that it's down right there at around 40.65 on the chart. So again, that's kind of one of the things, that's one of the ones I'm looking at today. By the way, this is a Singapore company. It's basically like an Amazon-ish. They do gaming, they do Amazon-type retail, online retail. The growth rate is incredible, but again, in this environment with what's going on in Asia, that's problematic. And speaking of what's going on in Asia, you want to know what's even kind of crazier is that Japan reported a 6% GDP number last night. All right, and there's, by the way, so much data. I mean, it's amazing when we are now a world economy, and so this is why things matter, right? And it matters because everything's interconnected. All right, Japan is the biggest holder of U.S. Treasury debt, right? So they matter. You have the carry trade. That's an important factor here. It's all tied in. China's the second biggest economy. It affects us now. Everything is interconnected, which is why some of these trade wars and stuff like that just make no sense, because ultimately, yeah, you might be punishing another economy, but you're also punishing yourself, right? I mean, there's no doubt that part of the inflation that we've seen is because we're now starting, there's been tariffs levied on certain goods. Well, guess what? If you're going to tax a good and it's coming into the U.S., who's paying that really? I mean, essentially the U.S. consumer, right? Because they're going to have to raise the price here for us. Again, it just doesn't make a whole lot of sense. Okay, let's go over a couple things. I promised that we would look at some head and shoulder patterns here. I want to show you guys this here, guys. All right, so head and shoulders. I'm going to teach a little bit about a head and shoulder pattern here. This is the Ethereum chart. All right, so the Ethereum chart, by the way, literally no movement on crypto. With all of the data that I just talked about, with the stock market doing this, China doing that, Japan, crypto, Bitcoin, nothing. I mean, at some point it will wake up. But this is why, by the way, this is why you have to be a trader that trades everything. All right, because when crypto's dead, I trade stocks. When stocks are dead, I can trade crypto or commodities. I can trade them all at the same time. Heck, you even can dabble in real estate when real estate's good, right? And so again, by learning everything I teach in the Winning Trader series, I think it's really important because it can be applied to everything. All right, so here we have, check this out, guys. On this chart, there's something called a head and shoulders pattern. All right, in fact, I'm going to go over here so you guys can really see. And essentially a head and shoulder pattern, you can see right here, bear with me as I freeze this up, right? So here's your shoulder, here's your head, and here's your shoulder, okay? So when we look at that shoulder, and this is called your neckline, from this, basically from the armpit of the shoulder, right, to the armpit of the shoulder. You connect a trend line right through there. That's called the neckline. Now, head and shoulders have actually a relatively high failure rate compared to a lot of other patterns. Oftentimes, a good pattern will be successful 70 to 75% of the time. I would say you're closer to 65 to 70 on head and shoulders, but that's because they sometimes trigger and then fail by getting back above. What is triggering? Let's talk about that. Triggering only occurs when price gets below the neckline. Price must break the neckline to trigger. Now, once it triggers, this is why head and shoulders are actually really cool. All right, yes, they have a slightly higher failure rate. By the way, how does a head and shoulders fail? If it closes daily candle below here and then closes back above, failed. Done. The break point and holding that break point is the key. That is the key. All right, now, this is the cool part. So essentially, what you do, and this is a secret, guys. So listen in. This is education. This is one out of about 1,000 tips that I go over in the Winning Trader series at Verified Investing, verifiedinvesting.com. But basically, to calculate the target on a head and shoulders pattern, what you do is you take the highest point of the head, you drop a plumb line straight down, you take that distance, and then you, from the break point, wherever it breaks on the neckline, you do that same distance. Now, what's amazing about this is if you do that, so it's basically like a measured move. You're getting this distance, and you should get that distance to the downside. All right, now what's crazy about that is that if this occurs, this brings us to approximately 1100. So if this trend line breaks and this head and shoulders plays out, you're talking about an $1,100 target on Ethereum. Will it happen? I don't know. It hasn't triggered yet. For all we know, Ethereum's going to go like that and never trigger. If it triggers, then it's possible. Now, by the way, if we go up and we take out the high over here, it can no longer be a head and shoulders pattern. Now, you can't have, remember, human body, shoulder, shoulder, heads higher. That's the pattern. Always has to be shoulder lower, higher head, shoulder lower. And again, generally, it's a little bit more complex, but that's one of the things to look for. Now, one of the interesting things about this, right, is that I always look for where's the target on a head and shoulders pattern, okay? And then I look to see is there another level in that area? And what we can see here is that if we look right down in this range, there's a level right here, okay, at this double bottom right here that matches perfectly with that target. That's pretty cool stuff, guys. Now, listen, let me come back into this frame here. All right, guys, so I wanted to go over topping tails, bottoming tails, as well as some other charts. I just don't have time. The market opens in about 8 minutes. I got to get to my desk. I got to get in the live trading room and rock and roll. But I will say this. I love being on these. I hope you find them useful. I will say that, again, last thing I'll just point out here is I'd like for everyone to go and follow Verified Investing, okay? Verified Investing on YouTube. Okay, follow them. Make sure you do, because this is where a lot of my content's going to go. And you can see all this fun stuff with this board. But follow this right here. We have more great players coming on to do content like this. All right, so make sure you do that. And again, folks, I do thank each and every one of you for making this stream so popular. I do want to continue to give you guys amazing content, and I hope you come back 9 in the morning, Monday through Friday. I will bring my A game every freaking time. Take care.